Okay, this article is coming from the FX Street. Australia New Zealand dollar refreshes monthly low below 1.0850 as Australian CPI softens and GDP trims. The Street was considering the Australian economy as a laggard in the FX domain, which has not shown signs of deceleration in the pace of soaring inflation yet. No doubt, Governor Philip Lowe has already pushed the OCR to 3.35% to bring down sticky inflation. More rate hikes are still favorable, as it would be premature considering a victory in the battle against price pressures. This week, the New Zealand retail sales data contracted by 0.6%, while the Street was expecting an expansion at 1.5%. Decline in household demand is likely to soften kiwi inflation ahead of, as firms will be forced to offer products and services at lower prices to match the current demand levels. So what this article is telling me is that inflation in Australia has not been tamed yet, and so the Bank of Australia is going to have to continue to increase rates, which would be bullish for the Australian dollar. When it comes to the New Zealand kiwi, they appear to have pushed rates high enough where they're starting to see demand destruction. So let's just go to the charts to see if the thesis of the monthly lows is panning out for the Australian New Zealand pair. So let's first go to the monthly chart. And this pair is a cross pair, meaning it is not paired or it does not trade against what's considered a major, a G7 country's currency. So some cross pairs are very volatile because they're not as liquid as, say, the major pairs. Major pairs deals with USD pairing with another currency. So when I look at the monthly chart, I see range bound, multi-year range bound, right? We're going to just say this is 1.14300. And on the bottom, we're going to say that is, we're going to make that parity, right? Parity means just one. And in the FX markets, they do talk about that a lot. All right, let's scroll down to the weekly chart. And we can see when price hit this upper range, it pulled back, but also broke this trend line. Now you could also say that price broke this trend line and price is breaking or just broke this trend line. Trend lines are good because it confirms a reversal. This just might be a situation where you have yeah, this is definitely sideways. If this low was below this low, potentially you would have a trend potentially being formed. Okay, so since we broke this short-term uptrend line, momentum is to the downside. All right, this is the weekly chart again. So price is now range bound within this range. So potentially you can play this range here, since this is just pretty much sideways as well, and the momentum to the downside. Let's go to the daily chart to see if there's any setups. Okay. I don't like these wicks in particular, but they do tell me that there is selling pressure. This area for me would be a first target. Right, so you're limited in terms of your reward to risk ratio. But if we're playing the short-term range, the yellow lines, then your target is going to be somewhere down here. So I'm going to take this off, and I'm just assessing the down wicks. Again, that's buying pressure. Okay, so this would be a good target. And why I like this is that what was support, resistance, support. I would say this would be a good area to short. We're just gonna, but I don't love the price action. And what I mean by that is price already pulled back to this area to fill any unfilled sell orders. So pretty much the remaining sell orders are going to be in this upper part of the range or the zone. So potentially the setup is the following. You have a pullback, before it continues down. And let's mark this area as 1.0950. Okay, I'm going to monitor this pair, the Aussie dollar, New Zealand dollar, aka the kiwi, and I will provide updates in a couple of weeks to see if the setup worked, if price did pull back, or if price continued to move down just based on the momentum. Let's just write this as a short term target at the 1.07500. Okay, until next time.